obviously, one of the key dynamics as companies are thinking about 2022 is obviously the dynamic around COVID, and particularly the variants, particularly vaccination. And obviously, one of the big differences between essentially this region and other regions around the world is that as problematic, as difficult as 2020, 2021 has been even more challenging. And this is particularly true for the emerging Asia markets, particularly India, as we see here, obviously looking at this graph of the number of cases as well, but increasingly basically over the last few months, several months, you saw this just continue to head throughout Southeast Asia. Now, this dynamic has had an impact on our healthcare clients, particularly as they're thinking through the demand planning impact that this has had on their business. And as companies start thinking about 2022, and one of the key storylines we will discuss, particularly when we're discussing around the funding outlook, recovery of medical tourism and other factors, is how can companies begin to plan ahead? Now, again, these disruptions, as I mentioned earlier, were much, much more intense across emerging Asia. And though in some cases you can kind of start to indicate a bit of a slowdown or reduction in terms of the impact of the latest variant in terms of COVID cases, there is still significant risk going forward. And that risk is very much driven by the level of vaccinations that we see across the region. And again, while some countries have significantly improved their vaccination, I would say within the markets that we will be talking about today, Malaysia is one of them. The key dynamic that companies need to assess as they are thinking through these markets within their regional, or in some cases, obviously global portfolio, is that many of these markets will still confront throughout a good chunk of 2022. And again, we'll make some different perspectives depending on some of the markets that are the exception to the rule, will still be confronting COVID-19. And many of these markets essentially already, and the governments have already started to indicate that they are planning to operate within the context of endemic COVID-19 management. Now, obviously that is the impact that it's going to have in terms of priorities and focus areas, whether it's around testing, vaccinations, and COVID-19 treatment. But obviously this also has key implications for healthcare and for the macroeconomic environment. And again, countries that continue to struggle, and will many of these emerging Asia countries continue to struggle with COVID, are going to carry substantially more downside risks than those that find a way to manage it. Again, this is one of the key dynamics of the story that we will be telling through today, and that companies should pay attention to as they are considering, okay, where to make the allocation, which markets are, in some cases, will experience the fastest recovery, not only of their economic growth, not only of out-of-pocket, not only in terms of funding and spending and expenditure and demand planning dynamics, but really the recovery of non-COVID care and whether there really is a strategy behind continuing to fund healthcare going into next year. Now, we're going to start out first with India, as we just try to provide a little bit of a deep dive into what's happening in this market. And I'll start first with the macro, and then I'll allow JC to walk you through the healthcare outlook. Again, the dynamic here is that there are many different factors driving India's economic trajectory. Over the short term, and this has been one of those key dynamics, the base effect skewing the growth rates, COVID cases and vaccination rates driving a lot of the economic trajectory, and a lot of what you might call almost yo-yo impact in terms of demand and growth in this predominantly out-of-pocket market and certainly consumer-driven market. Now, over the medium term, as you're looking at trying to drive the planning for 2022, the key dynamic here is that growth rates will normalize, government will begin to rein in spending and deficit, slightly different story in healthcare, but we'll get into it. Public investments in infrastructure remain high, and something that we will mention, JC will mention as we walk through, localization pressures will remain a key part of the story. Now, again, I mentioned about base effects here, but it is important to note in terms of GDP and investment levels index here is that One key dynamic is, despite the higher healthcare cost, you may call human costs of the latest outbreaks, one dynamic that has to be made very clear is that the economy, relative to that 2020 hit, has become more resilient over time. Although, again, the yo-yo impact is one that companies need to continuously be monitoring as they're looking at India. Again, we look into 2022 in terms of our expectations going into next year. The key dynamic is moderate levels of growth, especially compared to previous growth levels in India. Again, it's going to be by Indian standards, a moderate or kind of consistent economic growth path. But again, as I mentioned before, the potential for that growth path to be disrupted to a certain extent by COVID, by still some challenges around vaccination, still some road to walk when it comes to vaccination, remains something that healthcare companies, again, who at the beginning of the year, this year, were very optimistic about India to at least be somewhat chastened by the results of this year. Now, again, over the medium term, again, we'll keep our focus on 2022. The key dynamic is a stable, persistent growth path is something to look forward to as you are looking at where India is going forward. But I do want to make sure that we give enough time for JC to walk us through a little bit of that impact in terms of that growth. But I will leave you with this. And again, this is not just an India story. Regardless of the recovery to some level of growth that we will see across these emerging Asia markets, it is important, this factor, it is important, especially if you're looking at essentially reviewing, reassessing your pre-COVID investment plan. When we are looking at much of emerging Asia, you are looking at markets that have seen significant economic scarring. Again, despite the growth path starting to normalize, the growth expectation or the level of economic development or the size of the market will not necessarily, at least from a macro perspective, recover to pre-COVID levels very quickly. Now, I do want to turn it over to JC so she can walk you through a little bit of our healthcare system assessment in India.
Thanks, Antonio. So now going on to the healthcare outlook, as we enter Q4 this year, the top line story in India is that the healthcare system is going through a recovery phase now post second wave. So if we look at the healthcare demand, the National Health Data Mission, we get a better picture of what happened during the second wave with the most recent data. So there was a drop in demand during the second wave, but it was not as severe as it was in the initial lockdowns that we see last year. And this demand was actually slowly returning to hospitals. But what really elucidates here is that there's this persistent demand for some of the treatments that we see, particularly in the chronic care and elective surgery area. And the recovery trend was actually a lot faster than what we've observed during the same period last year, which is during April to March. During April and March period. The recovery was a lot faster, and there's a couple of reasons for this. So the first reason is because patient fear levels have fell with the normalization of COVID, and there's also a pent-up demand caused by some of these treatments that are a lot more resilient to the shocks from COVID. And also, as cases drop, on the supply side, public hospitals are also better able to manage these non-COVID treatments alongside COVID demand. So if we go on to the next slide, if we look at just the private hospital groups, there was a strong revenue recovery in Q2 this year, which was during the second wave. And it was even some of the hospital groups we see even a higher revenue compared to 2019 Q2 levels. And the main reason for this is actually the financial imperative for private hospitals to adapt and pivot their business models during the COVID outbreak. And so some sources of revenues for these private hospitals was, one, the charging these COVID-19 patients, getting revenue from there, and also expanding quickly into the diagnostics business. And so because of this, they were actually able to quickly invest in infrastructure to also expand their care and provide a more effective channel for the non-COVID patients while managing their COVID demand. So in the short term, private hospitals will continue to have a stronger spending power, and most of the spending would go towards infrastructure, such as expanding the hospital capacities, purchasing more hospital beds, and so on, especially when the country knows that it is heading towards an endemic situation. So we have also definitely observed anecdotal evidence of multiple hospital groups investing to expand their hospital capacity in Q3 and Q4 this year.